Okay, hello everyone, guys. Hello everyone. Good evening. How are you all? Good evening, everyone. My name is Afreen and I welcome you all to today's session. So, today's topic of discussion is Indian financial system, an overview of the Indian financial system. So, we are going to discuss a short overview of the chapter, related questions, and then all the discussions. Okay, first of all, this will be a very short overview of the chapter. Okay, so if you want to read and complete chapter and in complete detail, then you have to follow our courses on the Oliveboard app. Okay, so and if you haven't subscribed this channel yet, guys, subscribe the channel and just please like and share the video to the maximum to you can. Okay, so let's start the session. If we talk about the Indian financial system and overview, we are talking about the development phases of the Indian financial system. So there are four development phases of the Indian financial system. First is the pre-independence phase. Pre-independence phase means whatever the significant development that took place in the Indian financial system before 1947. There is a post-independence phase, that is from 1947 to 1991. There is the post-liberalization phase, means 1991 to 2010, and there was post-global financial crisis phase to 2010 to present. You have to first of all remember the complete year of this dates. So this is actually very important. Pre-independence before 1947, post 1947 to 1991, liberalization 1991 to 2010, global financial crisis after 2010 to present. Okay, now let us discuss first of all the phase 1, pre-independence phase 1. First of all, the establishment, the banking system was started with the establishment of Bank of Hindustan. Bank of Hindustan was the first European bank which has been established in India. It was established by Alexander and Mason Company in year 1770. It was the first bank which has been established in India. Then the second very important thing was the establishment of Bank of Calcutta. Bank of Calcutta, this was the very important phase of the pre-independence 1947 or before 1947, because there was three presidency bank. There was Bank of Hindustan, which has been introduced in 1770 as a European bank in India. Second, there was three banks which was known as Bank of Calcutta, Bank of Bombay, and Bank of Madras. Bank of Calcutta established in 1806, Bank of Bombay established in 1840, and Bank of Madras established in 1843. These three banks was known as Presidency Bank. Why? Because were they have the authority to publish the currency in India. Then these three banks were merged into Imperial Bank of India in 1921, and this Imperial Bank of India has been nationalized in 1955 and converted into State Bank of India. So till here, this was the pre-independence, means before 1947. All the three presidency banks, Bank of Calcutta, Madras, and Bombay, these were merged into Imperial Bank of India, which is now known as the State Bank of India after the nationalization of this bank. Okay, next. If we talk about the phase 1, the important thing was Bombay Stock Exchange, BSE. So Bombay Stock Exchange has been established and it was the first stock exchange of India. So Bombay Stock Exchange, it was established as the first stock exchange of India. Next, pre-independence phase during 1920 was marked by extreme turbulence because there was a closure of number of banks. Because see, in the early days, when the banking system was introduced in India, there was no regulatory authority for the banking system. And that's why, if we talk about the pre independence phase 1, there was extreme turbulence. Turbulence in what sense? Because there was closing of approximately 588 banks in the initial stages. And why? Because there was no regulatory authority. Every bank is doing whatever they can, and there was the lack of regulations and policies which lead to the closing of of different banks in India. And that's why in 1926 there was a recommendation by the Hilton Young Commission Committee to introduce a bank to regulate all other banking in system in India. And therefore in 1926 Hilton Young Commission recommended the Reserve Bank of India, which has been established in year 1935. So the bank, it was recommended in 1926. Reserve Bank of India Act passed in 1934 and establishment is 1935. Clear? Okay. Next, pre-independence phase 2. It is from 1947 to 1991. Now, what are the important things that has been done in this time period? First of all, this phase comes with the nationalization of two most important banks. Nationalization means when Government of India took the control of the uh, private sector bank. So RBI has been established as a regulatory authority for all the other banks, but it was a private bank. So in 1949, RBI, and in 1955, Imperial Bank of India has been nationalized and the name has been changed to State Bank of India. Now in 1956, 245 private insurance company, this has been nationalized to form the Life Insurance Corporation of India. Okay, next, if we talk about the government nationalization, so the very important thing in this phase, the Indira Gandhi government has took two important decisions. 1969, Indira Gandhi has actually nationalized 14 large private sectors bank which have the total deposit of 50 crore and above. So whichever the bank has the total deposit of 50 crores and above, these banks were nationalized by Indira Gandhi in year 1969, and these were 14 banks. And the second most important thing is 1980, again the Indira Gandhi announces that whichever the bank has the total deposit of 200 crore and above, these banks is to be nationalized. And there were 6 banks which are nationalized in this time. Okay, now these were the name of the banks which were nationalized in 1969 and 80. 1969, Allahabad Bank, Bank of Baroda, Bank of India, Maharashtra, Canada, CPI, Syndicate, UCO, United Bank, Union Bank, Punjab National Bank, Indian Overseas Bank, Indian Bank, and Dena Bank. So these were the banks which have been introduced and which has been nationalized by Indira Gandhi in year 1969. Whereas in 1980, there was 6 banks: Andhra Bank, Corporation Bank, Punjab and Sindh Bank, Vijaya Bank, Oriental Bank of Commerce, and New Bank of India. So these have the total deposit of 200 crore and above, and these banks have the total deposit of 50 crores and above at that time. Okay, next. Now, phase second, post-independence, 1947 to 1991, a very major step has been taken. On 2nd October 1975, the very first regional rural bank has been established with the recommendation of Narasimha Committee. Okay, now second, Development Financial Institutions and Industrial Finance Corporation of India has been set up in the same phase. Again, a very important thing. Next, if we talk about the major step, so RRB has been nationalized, that I have told you. Third thing, there was the Nabard establishment. So two most important thing that you have to remember: on 2nd October 1975, Regional Rural Bank has been established with the recommendation of the Narsimha Committee, as well as in 1982, Nabard has been established, National Bank for Agriculture and Rural Development, with the recommendation of Shiv Raman Committee. Okay, so these were very important in the phase second thing. Now phase third. Phase third, there was different recommendation. Special recommendation was by the Narsimha Committee. So Narsimha Committee has given two important phases of recommendation. One in year 1991 and second in year 1998. So phase one recommendation was to lower the statutory liquidity ratio and cash reserve ratio, to actually increase the capital adequacy ratio, to helps to interest rate to be allowed to be determined by the market forces. It means by the demand and supply, competition for the new private sector's bank, and freedom of operations. These were the recommendation of the phase 1 of Narasimha Committee 1991. There was phase 2 recommendation also, like a strengthening of bank in India and narrow banking system, review of the banking laws. So these were the two important phase of recommendation that was was introduced in after the liberalization. Because see, when we does the LPG reform in year 1991, with the introduction of LPG reforms in year 1991, privatization has been done. It means that not only the government, the various private sectors players are allowed in the banking system and in the banking sector. So these were the some of the recommendation that has been given by the Narasimha Committee in 1991 and in 1998. Clear? Next, if we talk about the fourth phase of the financial system, first there was a global financial crisis in year 2007 and 8, which was started and originated from USA. Okay. Second, there was different financial inclusion steps that has been taken by the government of India to increase the various population with the banking system in India. Like, there was Pradhan Mantri Jan Dhan Yojana. It means the opening of the account with no minimum balance requirement. There was JAM, means Jan Dhan Aadhaar and Mobile Trinity, that has been introduced by the government of India. So there was a global financial crisis, obviously. Next, there was what? There was the JAM and Pradhan Mantri Jan Dhan Yojana. Then licensing of differentiated bank, payments bank and small finance bank has been given. There was the PJ Nayak committee, which has been set up by RBI in 2014 to what? To review the governance of the board of banks in India. So these were the phase 4 of the globalization. Okay, so we have discussed the fourth phase of the globalization, uh, fourth phase of the Indian financial system. Okay, this is a very short overview of this chapter, and to learn more, you can subscribe to the Oliveboard Super Elite subscription for the further detail and the complete knowledge of this chapter. Then you all know about the JAIIB and CAIIB team. We are all educators that has been dedicated towards your examination and towards your exam preparation. Okay, next, if you want to download the PDF of this YouTube channel or YouTube class, you can just download this app. Then you select the JAB category, and now bottom you have the third option, course. And if you click in the course section, you will receive all the PDF in this YouTube class PDF section. You download it for free from this session. Now, there is a JAB Super Elite one-on-one plan which has been introduced, and if you are going to buy this plan, so these are all the batches which have been covered in this plan. There is a selection batch, there is a foundation batch, there is a master batch. You don't have to buy every batch individually. All the tests and all the batches will be covered in this Super Elite subscription course. Now, if we talk about the current subscription, so on the occasion of Raksha Bandhan that ends on 20th of August, there is a complete 46% off on this subscription amount. So originally the subscription is for rupees 7499, and this is for 12999 for 2 years and for 1 year. But if you are going to have this before 20, there should be a 46% off on this amount, and that will be a great deal for all of you. Okay, so thank you so much for watching this session. If you have liked this video, just please like it, share it, and if you haven't subscribed this channel yet, guys, please subscribe the channel and press the bell notification icon. Okay, and please comment and use the comment section to provide a feedback to the session. And if you want to learn more, you can have the access of the paid batches that has been introduced in the Oliveboard app. I am Afreen. I am your PPB and IEIFS educator in English medium. Thank you so much, guys. Till then, take care. Thank you so much. Bye bye, everyone. Take care, guys. Bye, everyone.